Hello and welcome to this session. I am your lecturer, Natalia Francois, and today we're looking at Chapter 3, Financial Statements and Ratio Analysis. Our objectives at the end of this session is to review the contents of the stockholders report, understand who uses financial ratios and how, use ratios to analyze a firm's liquidity and activity, use ratios to analyze a firm's profitability and its market value. And we're also going to use a summary of these financial ratios and the DuPont system of analysis to perform a complete ratio analysis. Now, the annual stockholders report. This report summarizes the documents the firm's financial activities during a period of time, usually 1 year. So it's a report that is given each year for a firm that is publicly traded, right, on the stock exchange. Now, the SEC, we said, which is a stakeholder, Securities Exchange Commission, is the governing body that authorizes these annual reports. Now, the guidelines for these reports are known as Generally Accepted Accounting Principles, GAAP, authorized by the Financial Accounting Standards Boards. And we would have done this in accounting 1, right? So let's look at a annual report. We'll see the content of an annual report. Let's look at NFM. National Flour Mills Annual Report 2020. So this is very current. Lovely cover page. So it starts off a cover page telling us what it is about. What is in this annual report? It tells us about the company, their vision, their mission, some corporate information, notice of the next annual meeting for shareholders. You get some financial highlights. Then you get an overview. The overview now is going to tell you, who are these people. So the introduction really tells us about the company. The overview now going to tell us who are the persons that is managing this company, right? So you're going to get the board of directors, some biographies of the directors, chairman's review, senior management review, reports of chief executives, financial overview. They have a 10-year comparison, good, and director's report. Now these reports you will deal with more when you do analysis of financial statements. Corporate governance report, but it's important for you to know what is included in these annual reports, right? So you get some information about the corporate governance of this company. And here's the part that we are interested in, the financials. So these are the statements we want to look at and analyze using ratios to see how the company perform in its liquidity, its activity, its profitability, and what's the market value of this company. So here you have a statement of the management responsibilities. You have the independent auditor's report. The auditors are outside of the company, so they attest to the information that is in this report that it is true. So people who are using it, stakeholders who are using it, they are protected, or they know for sure that this information is correct. Consolidated statements of financial position. We're going to look at that statement. The consolidated statement of comprehensive income, consolidated statements of changes in equity, and consolidated statements of cash flows. Now, financial position, sometimes they call it balance sheet. It may be known as balance sheet. The comprehensive income statement will be known as the profit and loss statement or income statement. Changes in equity, we'll see the changes, how it affects the stocks and retained earnings, right? And then at the end of these statements, we normally get notes. notes to the consolidated financial statements, explaining each category of what happens, right? So we're going to look at it. So this is the annual statement, right? We read the table of contents so we know what's in it. But in this class, we want to pay particular attention to the financials. So we're moving straight down to the financials, right? The first statement we have here is the statement of financial position, or what we call the balance sheet. So let me go back to my slide. Right, so the report, as we said, it is a document. It documents the firm's financial activities during a period which is usually 1 year. And it includes the letters to shareholders, right? So the management strategies, corporate governance, issues, and plans, right? As we saw. The four financial statements, the income statement, the balance sheet, the statement of stockholders' equity, and the statement of cash flow. And then we have the notes to the financial statements, which is an explanation on the policies and the calculations, policies and other details not readily seen in the financial statements, but shareholders, should be aware of. So the statement of income statement. It provides a summary of the operating results during the year. Now you know what the income statement looks like. You would have done it in accounting 1, right? So in this class, you're not required to do an income statement, but you should know the components of the income statement because you're going to analyze the statement so you can say what's the profitability or the operating results from it. It's more than just looking at the numbers, but doing a analysis will mean that you need to do some ratios. So we can see the top usually have the revenue, then the expenses that are incurred, cost of goods sold, are incurred to produce the products. Operating it gives us gross profit. And then we have any operating expenses, then we have depreciational expenses, interest expenses, taxes, to get our final net profit. And then we have, from net profit, we have earnings per share for each, for shareholders, right? How much will they be paid per share that they hold? So moving back to NFM, let's look at the statement. National Flour Mills. So we have their income statement is the second one, or statement of comprehensive income. So we see it's consistent, right? Because of these GAAP principles. So each statement will be consistent no matter what company you use. So we have revenue, cost of sales, gross profit, right? Any operating expenses, the finance, interest expenses, income tax expenses, gives you profit for the year. So we can see here, NFM profit for 2020 was 23,456. It's much more than 2019. You see these little notes to the side here, these numbers. So when we go to the end, we'll see what these notes represent, an explanation of each item. And we have the balance sheet, a statement of financial position. Now it shows, it's a summary statement of the firm's financial position. So sometimes they call it the statement of financial position. It really includes the assets and the liabilities and the debts. It tells you how these assets have been financed. If you remember the accounting equation, it says assets equal liabilities plus capital, right? So to to get our assets, for a firm to buy assets, we said how they raise money. They raise money in the stock exchange, or they raise money by debts, or they raise money if it's limited liability. Yes, they raise money through shareholder selling shares, and they raise money through debt, right? And that's what total the assets, what they're using money for to generate assets. So assets is usually on the top. Then we have the liabilities and the stockholders' equity. I'm sharing with you the NFM one just to refresh your memory, because you would have done this in accounting one. Assets, non-current assets first. Current assets listed, total assets for 438, that's million, 8200, right? So liabilities is 169,334, where we added to our equity of 268, we get 438,082. If you realize, it matches 438,082. Okay, and we can see they had more assets in 2019 than in 2020. Our ratios will help us analyze this information. Now moving back to my slide. The statement of stockholders' equity. Now this reconciles the net income earned during the year and any cash dividends paid with the change in retained earnings between the start and the end of the year. So it really says retained earnings, meaning the profit that we got from previous years that we didn't distribute to shareholders. We kept some. That will be retained earnings. When we look at adding the current net profit made and then subtracting whatever dividends was paid within that year, right? To give us our balance of retained earnings for the end of the period. The cash flow statement summarizes the cash flow for the period, right? So we know the income statement shows us the net profit. But in the income statement, we have items there, expenses there, where, we would not have paid as yet, on accrual basis, because we're doing accrual accounting. We would not have paid yet, or maybe revenues that we didn't receive yet. So the cash flow kind of reconciles that to actually tell us how much cash this company really have in its account. Now it provides an insight into the firm's operating as well, investing and financing activities, cash flows, and reconciles them with changes in cash during the year. So how a firm generates cash? It generates cash through operating activities, and that will be from selling what they go into business to sell. So like NFM would be flour, rice, and stuff. Investing activities. So they may have activities like investing in certain type of financial assets or physical assets, maybe new plant or rental of some type of equipment, right? And then you have financing activities, which is then investing in extra stocks and other long-term debts. Let's briefly take a look at what NFM has here. Right, so this is the changes in the stockholders' equity. You see, it starts with the profits and so forth, right? Cash flow from operating activities. Profits starts with the profit before taxation, and we make any adjustments for those items that are not cash items, depreciation, interest, dividend income. net cash generated from operating activities, right? And then you will have next investing activities, and then financing activities. Now take your time and review them as this is attached to your course shell. Right, so we really want to go on to explain. We really want to go on to explain. So explain how we analyze financial statements, because we're doing finance, right? We're not preparing the statements. We've done the preparation of the statements, but we need to analyze these statements to know if it's good investments, to make recommendations. So sometimes you have consolidated financial statements. You see the word consolidated. It simply means, for companies use these when they have different currencies in their accounting records. So they may be doing business. So like a hospital, for instance, a private hospital, they may be using foreign currencies. They have a foreign loan, so they use foreign currencies on some parts of their accounting. So as a separate income statement as opposed to one in a TT dollar. So when they consolidate it, they state it as consolidation, right? It just simply means it's in different currencies. The notes, as we said, are explanatory notes key to the relevant accounts in the statements. They provide detailed information on the accounting policies, procedures, calculations, and transactions underlying entities in the financial statements. Now look at LFM and see, familiarize yourself with some of the notes, what they look like. So financial ratios, this is the meat of the activity now. Ratios are used to analyze the performance of a firm. Now there are different types of ratios. We can measure using ratios cross-sectional, or sometimes they say benchmarking it, mean we compare it with key players in the industry or competitors, the competitors in the industry. So I have a ratio to compare to a profitability. How would I know or comment if this firm is profitable? I need to compare it cross-sectionally with a company on par. So NFM might be a Unilever or Angostura, right? You have to compare it to a competitor. Time series, or you compare it by years, right? So if you're looking at the profitability ratio, you can't say how profitable it is by looking at 1 year. You have to look at a series of maybe 2 to 3 years to make a comparison. As you see in the diagram here, below for this company, below will represent the time series, would represent cross-sectional. So they're measuring it against Bartlett industry and the industry. Sometimes you're given the industry average, whatever industry the company is operating in. And time series, we have here over a period. So let's look at these ratios. Just some notes, some cautions when using ratios to take note of. Ratios, they reveal symptoms that there might be a problem. It requires further investigation before pronouncement of a problem. So we might see some negative ratios or something that's off, and before we say the company is bad, it might be a result of, let's say, COVID-19, why the company performed horrible. Now, do not base the performance of a business on one ratio, right? Different ratios measure different areas of performance. To avoid fluctuations due to seasonality, compare statements covering the same period of time, right? So use only audited financial statements, right? Because the auditor gives a test to the information that it is accurate and they have complied with accounting standards. Now, changes in accounting policies, inventory and depreciation. sometimes they skew the results. Now be aware as well of inflation. So these are just some questions when we're doing ratio analysis. Categories of ratios. So we have liquidity, activity, debt ratio, profitability, and market value. Now liquidity, we really want to know how this firm is able to pay off its debts. Should we invest in this firm? Is this firm able to pay off its debts? How do we know that? Right? We look at the balance sheet and we see this firm has so much debts that they use to get all these assets. Can they pay it off? This ratio is going to tell us if they can pay it off. Activity ratios now, the firm ability to generate some sort of cash, right? The firm's ability to generate cash from the assets that they hold, right? Debt ratios now, how much of the assets are being financed with debt? We want to know that as well, right? And profitability will tell us if the business is making a profit and how much is it making, what percentage. Market ratios now, how does the business measure in relation to the market price? The price of a stock may be 200. Our market ratios will tell us, how does this measure in relation to the market price. Now, liquidity ratios, we have two ratios we use for liquidity. As you said, it's the ability to satisfy short-term obligations when they come due. Meaning, is it able to pay off its short-term debts? Simple as that, right? If a firm can't pay out its short-term debt, we know that there's some kind of problem. Bankruptcy will be, they're about to be bankrupt and they may have some cash flow problems. So if you should have your money invested there and you need it in a short time, there might be some challenges. A ratio greater than 1 indicates greater liquidity. So you want to see one at least 1, not less than 1. Or this firm may be in some financial distress. The two ratios we use is current ratio and quick ratio. So current ratio, here you have the formula. Current assets over current liabilities. Now tell me, I forget this is a recording. So your current assets, you would find your current assets and your current liabilities in your balance sheet, right? Or statement of financial position. You would get those figures there. Current assets, current liabilities are in your balance sheet, right? Quick ratio now. Quick ratio is just another ratio that they use. It's the same as the current, but you have the current assets over the current liabilities, but they included inventory because sometimes the equation or the results from the current asset could be skewed if it's a company that has to hold, large items of inventory or stock, right? So sometimes they take it out to get a more accurate result. So you use the current asset or the quick asset test ratio asset, right, to find the liquidity of a firm. And through the example, if you go back to this slide and you see through the example, so let's go back to this slide. Current assets over current liabilities in the balance sheet. We have here current assets totaling 1,223,000. And you scroll down, you get the current liability of 1,643. So it will be 1,223 divided by 1,643 for 2012. For 2011, it will be 1,004 divided by 1,450. And we see the results here. For 2012, it will be 1.97, 2011, 2.08. Right? When they compare it to the industry's average, you get 205, 205, So they said this ratio is okay because it's more than one. When you look at it over the years, or 3 years, it's also okay because it is more than one. Next ratios, or category of ratios, activity. So we have this liquidity, then we have activity. Activity measures the speed at which various accounts are converted into sales or cash, and how efficiently assets are being used. You really want to know if you want to invest in more computers, you want to invest in more assets. Let's look at this and see how is these assets being efficiently, these assets are being used. So there's 4 ratios: inventory turnover, average collection period, average payment period, total asset turnover, right? So you can use any one or two. I would prefer you use two to measure the activity of this firm. And here's your formula for the inventory turnover. Cost of goods sold. Where do we find cost of goods sold? It relates to sales, right? Or production. So it should be in that income statement, right? Divided by inventory. Where would we find inventory? Inventories are current assets. We'd find inventory in the balance sheet. Average receivables, we find that in the it's a current asset, so we find it in the asset section, current assets in the balance sheet. Average sales per day divided by average sales per day. Now there's a formula to find average sales today. Let me come back to that slide. All right. But the next one you want to look at is the total asset turnover. So basically you can use these two if you don't have that information. The inventory turnover and the total asset turnover. Sales divided by total assets. And the sales is in the income statement and the assets is in the balance sheet. Again, when you use the sales figure, it relates to income, and the assets figure, it relates to the balance sheet. So it tells us, how much money that we are earning in revenue from using these assets. And again, we use it over a period of a year, or we compare it to the industry or a competitor. The next portion of ratio is debt ratio. Now, the debt position of a firm indicates the amount of others people money being used to generate profits. Now, debt ratio, we have total debt ratio, total liabilities over total assets. So we know that we're going to find those in the balance sheet, right? So we're going to find that information in the balance sheet, and we just work the ratios. You would have done college algebra, you would have done accounting 1, so you know where to find these items in your financial statements. If not, review your financial statements so you know where to find the information, as well as doing your ratios. Times earn ratio, interest, earnings before interest and taxes. We're going to find that in the cash flow statement, divided by interest, again, which will be in the profit and loss. Fixed payment ratio, and you will look at all those things and you find them sometimes you find them in the income statement, or you find them in the cash flow. So you really want to know how a firm is going to be able to generate profits from getting into debt. Profitability, now there are few. My favorite is the net profit margin. You go through each one, and when you see profitability, you know that most of the items will be in the sales, in the income statement, right? So gross profit margin will be gross profit over sales, operating margin, operating profit over sales, and we know where to find these again in the profit and loss statement. Earnings available for common stockholders, you'd find that in the profit and loss statement if it is given, right, divided by sales. Right? So net earnings available for common stockholders will be the same as the net profit, right? The net profit at the end of the year. If it's not listed as available for common stockholders, it's simply your net profit over sales. Earnings per share, right? Return on total assets, profitability again, right? This will be the net profit over total assets. Return on common equity will be the net profit over common stock equity. And the last one I want to share with you is the market ratios. It relates to a firm's market value measured by its current share price. So it's the market price per share divided by the earnings per share. And we see that at the end of the profit and loss statement. Market price per share divided by the book value per share of common stock. Now the book value of a share, you normally may have to go into the notes, right, and you see common stock shareholders to see what's the book value of the share. Should you have to find out the market value. Now there's this DuPont system of analysis. This system of analysis is used to dissect the firm's financial statements and assess its financial condition. It measures the income and balance sheet into two summary measures of profitability, return on total assets, and return on common equity. So it's measuring the three components: assets in the company, debts in the company, equity in the company. We want to find out how the firm uses all of these to create profits, or to be profitable. What's their financial position? So it's a mixture of ratios. So here, return on assets, we use the net profit margin divided by asset turnover, right? And if you go back to the formulas, you'll see what the asset turnover would be: sales divided by total assets. Net profit margin would be net profit divided by sales, right? Financial leverage multiplier, normally it's total assets divided by common stock equity, and we're going to find that in the balance sheet. Return on equity, we use the return on assets, so this is our equation. So return on assets will be sales over total assets multiplied by the financial leverage multiplier. Now the average of the DuPont system is that it allows the advantage, of the DuPont system is that it allows the firms to break its return on equity into profit on sales components, net profit margin, and efficiency of asset use components, total asset turnover, and the use of financial leverage, right? How the firm leverages its debt, right, to make money. The total return to owners, therefore, can be analyzed in these important dimensions. Now, all of this would not be important unless you practice it. Right, so to summarize, the annual stockholder report, which publicly owned corporations must provide every year. You see it in the newspapers, or you see it published on their websites. Once they're publicly traded, they must provide it to shareholders. Ratio analysis enables stockholders like yourself, lenders, the banks, and the firm's managers to evaluate the firm's financial performance. It can be performed on a cross-sectional or a time series basis. So cross-sectional is across industry and time series is across years. Now, liquidity, or the ability of the firm to pay its bills as they come due, can be measured in the current ratio and the quick ratio. Activity ratios measure the speed with which accounts are converted into sales or cash. Inflows or outflows, the activity of which accounts are converted into sales or cash. Inflows or outflows, the speed of which inventory can be measured by its turnover, that of accounts receivables by the average collection period, and that of the account payable by the average payment period. Total assets turnover measures the efficiency with which the firm uses its assets to generate sales. Now, the DuPont system of analysis is a diagnostic tool used to find the key areas responsible for the firm's financial performance. It enables the firm to break the return on common equity into three components: profit on sales, efficiency of asset use, and use of financial leverage. Now, this is the end of the lecture. You are going to go into your module under section 3, where we analyze financial statements and perform the assignment. And so the assignment asks you the assignment has asked you the assignment gives you the report of national flour mills, and it asks you to perform the several ratios. I want to share it with you here quickly. So it asks you to analyze the actual financial performance of NFM. Prepare and interpret a complete ratio analysis of the year 2019 and 2020 operations using the following ratios. So current ratio, I want you to calculate the current ratio, the total asset turnover, debt, and so forth. And when you finish, you're going to summarize your findings and make 2 recommendations. Tell me, how did the firm perform? Profitable? How it perform? How is its debts? How is its markets? How is its activity? Right? You're going to comment on those ratios and make 2 recommendations. 2 recommendations can be: the firm should pay off its debts, the firm should generate more assets, and you're going to tell me why, right? Based on your results that you find, you're going to make the recommendations. Now submit it online and attach the cover sheet to your assignment. Good luck.